very extreme. If we want to explain the current state of the precious metal markets, that is our only option. Gold and silver are both virtually there, and there has been a tremendous shift in the prices of the other precious metals as well. Let's cover everything in this video as we explore, but we'll mostly be focusing on gold and silver. It was another crazy day for precious metal prices, that much is true. The meteoric rise of gold's price, which has already surpassed $4,000 per ounce on the spot market, has been nothing short of spectacular. Truly a remarkable decision. Seeing that is quite crazy, you know. Whenever I see precious metals, I ask myself, am I still buying with what I have right now? Well, that is something I need to give serious consideration to when and how I shop. In this case, my acquaintances at Summit Metals become useful. An outstanding business with first-rate products, lightning-fast shipping, and helpful staff. Read up on them. The description below includes the URL. The current state of the precious metals market is rather remarkable, and it is the culmination of everything I have been discussing on this channel over the previous several weeks. The argument for the bull run to go on merely gets stronger. Moving, like the one we're experiencing now, appears to have to come to an end eventually. When exactly, though, I am unsure. With the possible exception of a government reopening, there appears to be no end in sight to this. At this point in time, I do not believe the precious metal markets would be significantly affected even if the government were to reopen. I believe a time of consolidation may be on the horizon. To be completely honest, though, I doubt it will be by much. We have never seen a shutdown last longer than 7 years before this one. In my opinion, gold and silver didn't exactly scream price increases the previous time this occurred. There are a lot of ways in which this moment is different from the others. That may be the driving force behind it. According to Reuters, gold has surpassed the $4,000 per ounce mark for the first time today, continuing a record-breaking run fueled by widespread economic and geopolitical uncertainties and predictions of a US interest rate hike. Investors flocked to the safe haven asset when the United States reduced interest rates. On Wednesday, silver prices also reached new highs. It almost was true, but technically it wasn't. But things change when you consider the futures market. The futures market, however, is substantially distinct. Actually, I believe we are currently seeing a retrograde Asian era because to the fact that the silver futures price is lower than the market price. Therefore, that is an additional factor that needs to be considered. However, at this very moment, the futures price is $48.59. Just before the markets closed, I recorded this video. What are the precious metals doing at the moment? Though it has since retreated, silver's price surged earlier today to $49. Attention everyone, that is 41 cents less than $50. It came dangerously near to the intraday high or the average high of all time, which is, if my memory serves me correctly, $49.99. On the other hand, the requested price has increased by $9.01, or 2.36%. After a near explosion in price earlier in the day, soaring more than 3.1%, silver has experienced a significant pullback, a scale back. Contrarily, gold is also rising, but by a smaller margin. Today, it soared above that mystical $4,000 per ounce mark, up 1.43%, 4 or 5%, $57.80. Just earlier in the day, I reached a high of $4,600. With only a few minutes left until the markets close, it has settled at $4,403. In terms of percentage moves today, Palladium and platinum stand head and shoulders above the other metals. Platinum has gained $39 since yesterday. Early in the day, it reached a peak of $168. It's currently at $1,672, an increase of $39. However, the price of palladium has skyrocketed. Amazing. Currently, it's up $121, or 9% greater. Amazing. A total of $1,491 in under 24 hours. Palladium made a brilliant move. In an earlier video, I discussed palladium. If you get the opportunity, you should see it. Not many people did. However, silver is currently experiencing backwardation, with the futures price being approximately 50 cents lower than the spot price. It's very remarkable to witness that unfold. However, let's get into the subject matter and current events. Matthew Biggett, director of gold and silver at Metals Focus, stated that the current level of silver and its strength in relation to gold represent a favorable macroeconomic and geopolitical backdrop for safe haven assets, as well as concerns regarding traditional safe havens. After a 27% increase in 2024, the notoriously volatile asset known as gold is up 54% so far this year. Its 2025 performance is among the top assets, surpassing that of Bitcoin and global equities markets, while the US dollar and crude oil saw losses. I agree with that. That's quite incredible. The current state of the dollar serves as a proxy for the value of precious metals, therefore we keep an eye on it. The dollar is also rising at a respectable rate today. It has risen 0.2% to 98.85. Therefore, it is irrelevant if the dollar index is rising, while gold's price remains unchanged. Precious metals like gold and silver are on the rise. Coincident with the same forces propelling gold's advance and tightness in the spot market, silver has risen 71% thus far this year. As leasing rates rise, the silver market is even tighter. As seasonal demand in India continues to surge, the COMEX stock price reaches new all-time highs. As per Stuckey Cooper, global head of commodities research at Standard Chartered Bank, the recent increase has been fueled by substantial ETP that has been traded for actual inflows. Moreover, it's really mind-boggling. As I have mentioned in other videos, this is likely going to be a recurring theme, particularly in the silver market, where borrowing and leasing rates have just risen sharply. A number of reasons have contributed to the recent metals boom, such as rising political and economic instability, robust purchasing by central banks, large inflows from exchange-traded funds, and a declining dollar. Despite the fact that it has occurred previously, that is the lone anomaly today that is perplexing many. What this means is that gold and silver are sending a message that the dollar isn't going to stop them from climbing. We have not seen any catalyst for gold to retrace appreciably at the present, and these factors will continue beyond 2026. According to Piggott, gold is expected to keep climbing this year in an effort to challenge $5,000 per ounce. I agree with that. At this point, we are discussing the possibility of $5,000 for gold. Do you think it's possible? Though $4,000 may sound like a lot of money, we find ourselves in this situation today. The idea that silver could be priced near $50 was also considered ridiculous by many of us, but here we are. That's quite incredible. Markets are currently estimating that the Federal Reserve will lower interest rates by 25 basis points at their next meeting, and they predict another cut in December. While many were apprehensive of excessive inflation, Federal Reserve officials concurred at their policy meeting that the danger to the US labor market had grown to a point where an interest rate reduction was warranted. Newly disclosed minutes from the session on September 16th and 17th reveal that demand for bullion has been fueled by global crises, including the war in Ukraine and the Middle East, as well as political unrest in Japan and France, which has exacerbated the flight to gold. Investments into gold exchange-traded funds, ETFs, reached $64 billion so far this year, with a record $17.3 billion coming in September alone, according to figures from the World Gold Council. The current situation with global central banks' ongoing accumulation is then revealed. At the end of this video, you'll see a link to a video I made earlier today in which I discussed China's continued addition of gold for the 11th year or 11th consecutive month. That's quite incredible. Another factor that is adding fuel to the surge is FOMO, or fear of missing out. Repurchases are on the rise. Once again, large institutions are purchasing. You know, I've always warned you and myself on this channel not to buy because we're afraid. Trust me when I say it's tough to skip these occasions. However, keep in mind that the price of precious metals could fall at any time you purchase them, regardless of who you acquire them from, the channel sponsors on metals or anybody else. It might turn around and regroup. In some ways, it's long overdue. The recent price drops, particularly in silver, were transient. However, this is the third consecutive time that this has occurred now. That's quite incredible. Gold is now overbought, according to the relative strength indicator, which is at 87. HSBC increased their average price projection for 2025 to $38.56 per ounce, and for 2026 to $44.50 per ounce, supporting their decision with the following reasons: anticipated high gold prices, resurgent investor demand, and volatility trading involving participants. Our average prediction for the year is thus presented. That doesn't account for the highest points we're experiencing right now, but it does explain for average high points. Other precious metals joined the bandwagon. We covered that ground before. It is quite remarkable to observe the history unfolding before our eyes today, particularly in relation to silver. I still can't believe that silver was within 41 cents of $50 per ounce. When I look at the figures, it absolutely blows my mind. In my opinion, there will be some supporters even after this. Part of the reason resistance is shifting in the markets is because of it, in my opinion. Silver prices have dropped down below $49 again, just as I am starting to record this video. Now it's $48.91. In spite of the recent setback, it is still up over 2% from where it was a few days ago. However, it is rather disheartening that it did not close above $49 and is unlikely to do so unless there is a sudden increase in volume in the minutes leading up to the market closure. It had a fantastic day though, and it did explode, a tremendous explosion, to $49.59 earlier. After then, a reversal occurs. This is predictable to a certain extent. In the space provided below, please share your opinions with me. It is my sincere wish that you have derived anything useful and instructive from this video. Thank you so much for watching. I really appreciate it when you hit that like, share, comment, or subscribe button.